I thank all the members and speakers and respected Preeti Savla ma'am for joining today for VCM on amendments related to charitable trust and its registration. I would like to give a short introduction for Paras sir. Paras sir is a partner for KPB and Associates. He's a fellow member of ICAI, and he's also associate member of Institute of Chartered Accountants of England and Wales. He holds qualification as registered valuer for securities and financial assets, insolvency resolution professional, business and finance professional, diploma in information system audit, and he's also a certified fraud examiner, which is an association of certified fraud examiners USA, and he's also a commerce graduate. As far as experience of Savla sir is concerned, he has over 2 decades of experience. He has advised several corporate and non-corporate on domestic tax, international tax, investment into India and out of India, structuring the transactions, valuations, conducting due diligence and planning for mergers, demergers, acquisitions, insolvency resolutions, direct tax litigations, and corporate finance. He is well versed with Indian regulatory environment from investing and structuring perspective. He has also advised various non-profit organizations on regulatory and taxation matters. Previously, Paras Savla sir had a stint with one of the big 4 accounting firm in the area of transaction advisory services as well. His views are regularly quoted in leading Indian and foreign newspapers. He frequently contributes to various magazines, newspapers on topics of direct taxes, corporate laws, and valuation. He has been a speaker at various forums. He has held a various leadership position with professional and trade organization. Sir was a president of the Chamber of Tax Consultants and Severe Chartered and Cost Accountants Association. Currently, he is a vice president for Indo-Belgium, Luxembourg Chamber of Commerce and Industry. With this introduction, I would request Preeti Savla ma'am to say a few words, ma'am.
Pankaj, convener, Shikha, deputy convener, and past conveners. I see various senior members and my dear friends. I hope everyone is safe and healthy, and I wish that everyone is safe. And friends, I really appreciate the efforts of convener and entire team and core team for doing in such pandemic also doing such a great work and sharing the knowledge. I really appreciate. That's all, Pankaj.
Thank you, ma'am, for your kind words. We are grateful to have you today with us. So with this short introduction, I would request Paras Savla sir, please to commence with the VC. Thank you, sir, for accepting our invitation, and thank you, members, for joining.
Thank you, Pankaj, for inviting me. Let me share my screen.
Yes, sir.
My screen is visible?
Yes, sir. Yes, sir.
And my voice is audible?
Yes, sir. Yes.
Thank you. I thank the Chembur CP Study Circle to give me opportunity to speak or to share my views on recent developments on the Charitable Trust. And thanks, Pankaj, for inviting me. I had been to the Chembur Study Circle in past also, and I love coming to the study circle again and again. Coming to the topic, recent development in charitable trust. We are going to look into the amendments which are to be applicable as per the Income Tax Act. If you see the last 2 decades, every year one or the other amendments, every finance bill is carries one or the other amendment which is related to the charitable trust and institutions. Why so? So charitable trust, when I say it includes the charitable trust, society, it includes the Section 8 company or Section 25 company, it includes the religious organization and charitable and religious organization also, and the schools, colleges, institutions which are registered under the Section 1023C, and the other amendment are under the Section 11. So broadly, these all types of organizations are covered under the charitable trust and institutions, charitable and religious trust and institutions. If you see the recent 10 to 12 years, the CNAG reports, the CNAG has been doing the audits not only of the central government but also of the state governments, and they always had some observations pertaining to the charitable organizations. Not only CNAG but also Public Accounts Committee. Public Accounts Committee is a committee of the parliamentarians, and the usually chairman of this committee is the person leader from the opposition. So they all these have one or other observations relating to the charitable organizations, its functioning, uh, its claiming deduction under Section 11 or Section 1023C. And so because ultimately the deductions, whatever is claimed by these organizations, is a loss to the exchequer. Loss in the sense the government is foregoing the income in the form of taxes to this organization. And as such, charity is very imbibed in the people, and irrespective of the faith what the person practices, charity is always there. So even the smallest of the person will try to do some charity in one form or other form. If you look at the few of the reports of the CNAG, reports of 2013, 2017, and 2019, I thought lays down the very fundamental or foundation for the amendment which has been made over a period of time. In 2013, report 20 of the CNAG observed that the grant or approval of, or registration is granted by the Income Tax Department without adequate documents. There is irregular exemption by the trust, creating huge surplus consistently. Application of the income is being made in the prohibitive investment or which is not an approved investment. And there is no monitoring of the foreign contribution received by the trust. In 2017, also had a similar observations that exemptions of trust allowed to everyone. There is no performance monitoring or performance measurement of those trust or institutions, whereby so that their exemption can be denied. Trust not fulfilling the criteria of charity under the governing laws and still claiming the exemptions. The exemption allowed to the trust or hospitals engage in non-charitable activities. There is overlapping of exemption provisions under Section 1023C and Section 11. Considering the adopting global practices, it is required to maintain the database of all charitable entities. Donations are not being properly vouched. So persons who are claiming the donations, whether they are really given the donation or not, the irregular allowance or depreciation expenses relating in the double deduction. In 2019, diversion of income property related to the group of institutions. So there is a diversion from one trust to another trust. Exemption granted for various activities which are not charitable in nature. Lack of monitoring for the investments as specified by the law. Exemption to the SSC, where voluntary contributions including foreign currency donations are considered corpus without specific directions from the donors. And there is non-cancellation of registration where the activities are not accordance with the provisions of law. The observations, if you see, there has been iterating the same observations over a period of time, and even the similar observations were made in past also. Besides this, on the basis of this observation, the PEC has also come out with his own report number 104 of July 2018. It has observed that exemptions to in the report is titled as exemption to charitable trust and institutions, express the concern that public charitable institutions are being used to run commercially for profit and has been repeatedly violated the provisions of the Income Tax Act. The committee was concerned over the serious nature of all the violations and failures of the Income Tax Department to monitor whether the trusts are fulfilling the objectives under which they are established, and also ensuring that there is no abuse of concession enjoyed by the trust. So these are the observations which have been made by the CNAG as well as PEC, and you will see the amendments which have been made over a period of time are surrounding these observations. The amendments are not only made under the Income Tax Act, but also under the various other laws like FCRA, the Foreign Contribution Regulation Act, where registration is been, earlier registration was granted permanent. Now the registration is granted only for 5 years and is subject to renewal for every 5 years. There is a centralized database to be maintained by the Niti Aayog, and various organizations are required to register with the Niti Aayog if they are claiming any donations or receipt from the central government, state government, or institutions which are funded by these governments. With these words, let us look at the amendments, have a glance of the amendments which are made over last 6 years. In 2016, the exit tax has been introduced on the accredited income. So exit tax, so whenever any trust is deregistered or trust is claiming that its registration should be cancelled. So whatever assets trust is holding, and as on that date, that's required to be valued at the market rate, those assets. Rules are there specifically how to value those assets. And once those assets are valued, you have to pay the tax on that assets as on that date. In 2017, it was provided that whenever there is an amendment in objects or the registration should be required. Re-registration under the section 1023C as well as section 11. So that time that's section 12A or 12AA. So any trust who is claiming exemption from section 11 to 13, they are required to file the return of income. Earlier return, even if filed under section 139 and 4, that is a belated return, who are able to claim. Now return is required to file within time limit as specified under section 139 and 1, and its report is also required to be filed by that date. So cash donations exceeding rupees 2,000 is not eligible for the donation for ATG, and restrictions on the corpus donation have been introduced. In 2018, the amendments were introduced which were applicable to business, that any payment in cash is not allowed as deduction under section 40A3, and similarly when any payment is made on which no TDS has been made, then deduction under section 40A is restricted. In 2019, the section 12AA, you see that observations of CNAG was there that the registrations are not being observed, or post giving registration they are not being evaluated. So considering that observations in 2019, section 12AA was amended, and which provided that registration by the trust laid down various conditions for the registration to be allowed, or review of registration should be done, that has been provided in 2019. In 2020, the whole process for re-registration has been revamped. It says that all trusts are required to obtain a re-registration The provisions were applicable from the 1st October 2020, but however, due to pandemic, it was postponed to 1st April 2021. So registration is applicable under 1023C to the trust institution under the 12AB, donations which are being under section 80G as well as section 35. There are observation that 1023C or multiple exemptions are being allowed to the trust. So considering that they have said that now either trust can claim an exemption under section 1023C or 12AB, it can't claim deductions under both these sections. Recent Finance Bill Act of 2021 also introduced further restrictions on the claiming deduction, that there are restrictions on corpus donations. The repayment of loan will not be treated as an application, and the carry forward of deficit is not allowed to be claimed as a set-off against the future year's income, and additional compliances has been introduced with respect to the donations. Let us see the amendments which are made in 2020 and 2021. We may have a look over those amendments. The access application. The provisions of charitable trust, which is provided in the section 11 to 13, is a core in itself. So other provisions are not applicable. For example, any income which is exempt under section 10, but the trust is claiming exemption under section 11, 12, then they are not entitled to claim the exemption under section 10. Similarly, the computation provisions which are applicable under the other heads of income, be it capital gains, be it other sources or business, as such are not applicable to the charitable trust, except to those amendments which are specifically made applicable. So similarly, section 72 to 74 or 75 deals with the set-off and carry forward of losses. These provisions are also not applicable to the charitable trust. So in the year in which any excess application is made, so which will result into losses, whether such losses can be claimed the subsequent year or not. As per the rulings, various rulings by the tribunal as well as high courts, the excess expenditure was allowed to be set off in the subsequent year. Now, explanation 5 to section 11 has been introduced, which bars set off and deduction of allowance of expenditure of earlier years. If you look at the example, then in the assessment year 18-19, there was excess expenditure of 400, or you can say that there is a loss of 400 after computing the income. And for the assessment in 1920, the income is 300 after claiming all deductions as allowed under section 11 and 12. So, though 300 can be income can be set off, or it was possible to set off against the excess expenditure of 400 in earlier years, and the taxable income for the assessment in 1920 would have been nil. Now, what will happen in the current scenario after the amendment? This amendment is applicable from the financial year 21-22, and as per the amendment now, whatever excess expenditure which has been claimed in the earlier years will not be allowed to set off. So in the assessment year 20-23, if the income is up to 300, there is excess expenditure of say 100 in the earlier years. This 100 is not allowed to be set off, and the taxable income would become 300. Application against the borrowings. So whenever any borrowings has been made by the institution, and any expenditure is made or application is made out of that borrowing, there was no bar as such. so for claiming any deduction. So whenever you borrow the money and you spend something, borrowed money is not income, but when you spend something out of that borrowed money, it is claimed as a application. As in when the again, as in when the loan is repaid by the trust or institution, as per the old CBT circular of 1973, the repayment of loan is also considered as the one of the objective is a spent towards the objects of the trust, and the deduction was claimed for that repayment of loan also. Now it is provided that whenever any application of income is made, whenever there is any application out of the borrowed funds, amount that spent or that applied will not be treated as application. Application will be treated only in the year in which that loan is repaid and not in the earlier years. So now the issues, if you see the example, say in the 1920 there was borrowing of 100, application was 100. So my income become, my whole application of income is 100 rupees. In 2021, I am repaying that borrowing, and again that 100 rupees is considered as the application. Because this usually this application would always have been paid out of the income of the current year or the previous year. Hence, the application both at the time when the borrowed funds was used for applying and the repayment of borrowed funds was treated as application was, in my view, correct. But now what has been provided that my borrowings is 100, application is 100. So application will be considered as a nil. But subsequent year when, or in the subsequently, maybe in the same year or in the subsequent years, if I am repaying the borrowing of 100 rupees, my application would be considered 100 rupees. So there can be various issues arising out of it. That in the earlier year, I have already claimed the application as a borrowings, any spent has been made out of borrowings, and now from the financial year 21-22, I am repaying that borrowing. Whether the repayment of borrowing will be allowed as deduction or not, because I have already claimed the deduction in respect of the amount spent in the earlier years. Looking at the language of the section, probably in this case, when the application has been made out of the borrowed funds, may not be, the repayment of borrowings may not be considered as the application in the current year. Then the corpus donations. So whenever in corpus donations are received, it is considered as an application. There is a blanket exemption for receipt of donations which are in the corpus in nature. Now it is provided that the income is whatever money donations which are received as a corpus will be allowed as an exemption only if it is invested in the as per the specified modes under section 11.5. Any application out of corpus will not be treated as application of income. Further, spending out of corpus will not be treated as application as considered. If the investments are replenished, it will be considered application in the subsequent year. So any donation which is received by the trust, if I'm spending, it is corpus donation is exempt. And other donations is when I'm spending to the extent of 85%, then it is claimed as a application. And there is no taxable income. But now it is said, if I receive corpus donation 100, I made a need to make an investment under section as per the mode specified under section 11.5. In that scenario, there will be nil income. If I'm not making investment under section 11.5, then the corpus exemption under section 11 with respect to corpus donation is not allowed. And when I am spending any money out of the corpus donation, then the such spending will not be treated as an expenditure. So in the assessment year 23-24, you will withdraw the investment and acquire some assets. So the acquisition of the asset is not considered as an application in 23-24. But in my scenario here, my investment has reduced by 60. So now net investment out of this corpus is only 40. In the assessment year 24-25, I received another donation, say 20, and I'm making investments of 60. So when I'm claiming a new fixed deposit of 60, so 20 is considered towards my current year's corpus donation. So that will get set off and I can claim exemption. So balance investment is of 40. On this 40, I will be able to claim the exemption because that has been replenished, the investments has been replenished to the extent of what is amount withdrawn from my previous year. So now I need to keep track of these things, what was investments, when these investments were made, when the withdrawal was made, and whenever I replenish those investments, I am able to claim deduction. There is no mention about a time limit within which these investments has to be made. Whether I have to make immediately or I have a time limit for up to due date of filing return of income, or it is till the 31st March of till the end of the financial year, or which should be done within the 1 month, 2 months, 3 months, or 6 months. There is no guidance provided under the law, but considering the objective of this provision, in my view, if the investments are made by the end of the previous year, should be considered as a compliance with the provisions of the law. These are the basic amendments which are dealing with the computation of the income. Now, in order to claim the exemption, you need to get any trust or institution need to be registered under the section 11, under section 11, 12A, 12AA, or section 1023C. But if you see the observations which were made by the CNAG, that there is no continuous monitoring of these trusts or institutions. So considering that there is a new provision which has been introduced, and explanatory memorandum says that trust company needs improvement. The registration of the trust or company requires improvement with the advent of technology and keeping in mind the practical issue of difficulty in obtaining registration, approval, notification before actually starting the activities. Further, that approval or registration should be for the limited period, say for the period not exceeding exceeding 5 years at any point of time. And again, there should be checked to ensure the conditions governing approval or registration are adhered by these institutions or trusts. And further, there should be no adversarial regime by which the trust institutions should be harassed regularly by way of roving inquiries. So once the registration is done, and again that registration is due at the end of every 5 years, then in that scenario, you can claim, so there should not be any harassment or any roving inquiries made by the tax officer time to time basis, because its registration is again subject to review at the end of 5 years. So if you look at these provisions, new provisions which are introduced, so registration under section 1023C, 12AB is there, 80G is there, and section 35(1) is there. The new forms are introduced for the registration is 10A and 10AB. This applies for registration under the section 1023C as well as 12AB and 35 and ATG. For the purpose of registration, section 35(1), the form 10CF has been introduced. The form 10AC and 10AD are the certificate which is issued by the commissioner or principal commissioner granting registration. And 10BD and BE. 10BD is a statement to be filed by the charitable trust with respect to donation of receipt, and BE is a certificate to be issued by the charitable trust with respect to donations received by it. So these are the forms, these are the rules which have been amended, or the forms, new forms has been introduced. Let us start with the registration process, look at it. So when you're doing registration, the registration process is similar for the registration under section 1023C, section 12AB and ATG, as well as under the process under section 35(1). So let's 1023C or the registration under section 11 for claiming deduction under section 11 under 12AB is the most common registration will be applicable to large person. So let us take the example considering the re-registration process with respect to the institutions claiming exemption under section 11. So all institutions which are registered or trust registered as on 31st March 2021 is required to obtain a re-registration within 3 months unless until due date is extended. So they need to file the application before 30th of June, an application to be filed in the form 10A. The trust which is already registered, the case if what we say here was made application 10A and it got registration, and registration is for the period of 5 years. Such type of trust or institutions need to reapply for re-registration before end of 6 months, 6 months of its registration. So trust which is registered, say which is registered in the month of April 2021, its reapplication will come in the 26th. So 6 months before that reapplication has to be made. So that will be somewhere in the post July 2025, application is required to be filed by the such trust or institutions. Once the trust is registered, so now it is provided that any trust which is there newly commenced the trust, they will grant a registration, a provisional registration of period of 3 years. So they are required to obtain registration for the 6 months prior to the end of the registration of provisional registration or within 6 months from the commencement of activities. Any other trust or institutions which has become inoperative under first provided section 11 and 7, they are required registration 6 months prior to commencement of the assessment year. The trust will become inoperative under the first provided section 11 and 7 are those institutions which are registered under section 1023C and also under section 12AB. And so once the trust registration under section 12AB also, the registration under 12AB becomes inoperative and 1023C is continued. So in that scenario, the trust wants that registration should be continued under 12AB and not 1023C, they need to apply within 6 months prior to the commencement of the assessment year. Any trust or institution who makes an amendment in its object clause, they are required to apply for re-registration, and for this re-registration they need to apply in the form 10AB and it is to be done within 30 days from the adoption or modification of the amendments. The issue may arise that if the trust is registered under the Maharashtra Public Trust Act and they adopted the changes, thereafter any changes which has been made is required to be approved by the Charity Commissioner by order. You have made application for the registration. And once you have made an application for this re-registration, then you have to, within 30 days from the approval by such regulatory authority, you are required to make a application for re-registration, and it is to be done in the form 10AB. In case any of the institutions which not falling under these first 5 categories, they are required to make application in the form 10A within the 1 month prior to the commencement of the previous year. So the trust who fails to make application by 30th June or such extended period, they will lose the exemption for the financial year 21-22. And if they make, say, suppose they make application on the 1st July 21, in that scenario, the registration will be valid from the financial year 22-23, and whatever income they earn during the financial year 21-22 will be subject to tax. So when you are making application for the registration, what are documents you require to file for this? The copy of instrument under which the trust is created. So the trust deed, memorandum, articles of association, memorandum and bylaws in case of society is required to be filed. Then copy of document, in case there is no such instrument, then any such document which will establish the which will prove that trust was created or established under the relevant provisions of the law. Then copy of registration certificate issued by the registrar of companies, registrar of firms, registrar of societies, or registrar of public trust. So in Maharashtra, it could be the ROC certificate or the certificate from ROF or certificate from the Charity Commissioner. Then copy of registration of FCRA certificate if it is already registered FCRA. Then copy of existing registration under section 12A, 12AA, 12AB, 1023C, 80G is also required to be submitted. In case trust or institution is there in existence for more than 1 year prior to when the application is been made, in that scenario also required to submit the accounts of the previous year. However, it has been said that the return is been filed for the years for which return was due. So currently, in case you are making application as on date, so returns are due date for the returns for the financial year 1920 has already lapsed. So if the return up to financial year 1920 is filed, in that scenario, you are not required to submit the financial statements. These are the documents you required to file under the along with the form A12 10A. When the application has been made under the form 10AB, the additional document is required, that is a copy of rejection order if the rejection was made in past, and the copies of accounts of business not exceeding 3 years along with the tax audit report. So if any trust institution also engage in the business, it is required to submit the copies of the accounts of such business along with the tax audit report if applicable. In past, whenever the certified true copies of the instrument or the certificate was required to submit it, it was said, it was been department insisting that certified true copy should be obtained from the respective regulatory authority and not by the SSC. However, this requirement has not no more continued under the Income Tax Act, under the new provisions of the Income Tax Act. So here, the certified true copies is required to be certified by the trustees or director or of the trust, and those documents is required to be submitted. Let us look at the form which is required to be filed for the registration. Whether my new screen is visible?
Yes, sir. Yes, sir.
So this is the form 10A, which is required to be filed by 30th of June, or in case of new trust for obtaining the provisional registration. You can get this form by logging into the login ID of the trust that you can follow with the e-filing portal of the income tax website and get into it. The PAN number, first item is a PAN number. You are not required to fill the PAN because once you log in using your login ID and the password, the PAN will be auto-filled. Election code now. There are 12 categories which has been identified for which this form can be filed under this thing. Though it has been really said that this is applicable only in respect of the existing trust, as well as for the who are making application, the provisional application. So what are these 12 categories as such? These are the trust, this applies to the trust, then the institutions under 1023C or ATG registration. And under this category, there are again the various classification of institutions has been made, especially under the 1023C for the education institution, then medical hospitals, and so on. So you need to choose the relevant applicable category depending upon your category of the institution. And once you choose that category, other provisions will come into the picture, and other columns will be popped, and you need to make an application, fill those columns. Then type of constitution. Nature, what are nature of activities? The activities has to be charitable, religious, or charitable come religious. So you have to choose one of these things. Then types of constitution. So it can be a society, it can be trust, it can be company or others. So as such, broadly there are only three categories: trust, society, or company. Company will be registered under Section 8, or if it is registered under 2013 Act, or if prior to that, then it will be a Section 25. Others can be, for example, in Maharashtra, there is one more registration is available for not-for-profit organization, then which is been registered by the registrar of firms. So in that scenario, others category may be chosen here. Whether the applicant is established by an instrument, yes or no. There can be a trust or institution which is been establishment, and for which no institution, there is no certificate, there is no bylaws, or there is no memorandum, or there is no trust deed, and such trusts are either created by the oral, or they are created by the customs. So you need to specify whether there is any instrument, yes or no. If there is instrument, then date of incorporation of such institution or creation or registration Date of incorporation will be general date on the company is there. Creation, for example, trust. Trust is created on the date when the trust deed is executed. However, registration may take time and it is registered subsequently. In that scenario, I believe you can put the date whichever is earlier date and not the whichever is later date. The registration number and incorporation number it is issued by the regulatory authority with whom you are registered, which can be mentioned here. You have to mention who is registering authority. It can be a registrar of companies or charity commissioner or registrar of firms. Objects of the trust of the applicant. So objects we have to consider. They are category. It is not you are not required to reproduce the objects from the trust deed. You are to required to choose those objects which is there in the uh, tick mark box, and those objects are categories are religious, relief to poor, education, medical relief, yoga, prevention for environment, prevention for monuments or place or objects of artistic or historic interest or advancement of any other objects of public general public interest. So you need to choose the object from these things, from this identified by the revenue. So this is basically a definition under section 215. You are choose from the definition itself and you are not required to reproduce your object clause as such. Then you have to mention whether your trust is revocable or irrevocable. You have to write yes or no. The CNAG in past has raised the objections that registration is granted to the trust even if those trusts are there is no specific provision in those trusts regarding irrevocability. This applies the clause applicable only to the trust and not to the society or the section 8 company as such. So this the words used are only trust and not the institutions or other thing. And if the trust does not have the irrevocability, whether that the registration can be rejected. In past, they were rejecting those things, but let's see under the new set of provision how the treatment is given, and probably this treatment will be given uniform across the country now, uh, and not the each commissioner will follow his treatment. As such, there is no provision under the Income Tax Act that the trust which has been granted registration under section 11AA or or 1023C is should not have any clauses should regarding revocability or irrevocability. Further, now there is exit tax. Exit tax in the sense that whenever trust whose on violation of certain provisions, its registration is rejected, registration is cancelled, rejected, as the case may be, then the trust is required to pay the tax on the market value of all the assets. So which is there under section 115 TD. Considering this provision of taxing the trust at the maximum marginal rate on the basis of the assets which are there, as on the last on the date when it is the registration is cancelled, the uh, provision irrevocability is loses its relevance, and as on date when any revocation is being done, there is no loss of revenue. On the contrary, the revenue will be larger to the uh, tax department. Then if you whether the applicant holds registration before the any other authority like Darpan or FCRA, then income tax registrations under the section 12 A, 12 AA or 12 AB, ATG or 1035, then all those registrations need to be mentioned here. So you have to mention the relevant law, registration number, date of registration, authority granting registration, and date on which this registration is effective. So in case there is a trust which got ATG registration say in 1970, it is an old registration and it has a registration in 1970. Subsequently, there were renewals of those ATG donor registration. You have to write the date of the first registration and not the latest registration date. The registration which is on the Darpan portal. So, as I stated earlier, in case any trust or institution who is claiming deduction under section, who is claiming any donation from the government, whether it be state government, central government, or any authority set up by the government, then they are mandatory required to obtain registration from the Darpan. Darpan is the portal which has been maintained by the Niti Aayog, and all the trusts, they are maintaining the centralized database of those trusts. So now with this application, there will be centralized database available with the Darpan portal who are registered there, and also with the income tax department. The centralized database with the income tax department will be much larger or much broader as compared to the Darpan database. In case the application was rejected in past, you have to mention the details of such applications which were rejected. However, it may happen that your registration which was there was rejected, but thereafter you approach the appellate authority, may tribunal or high court, and they have granted the registration or they directed the department to do a registration. There is no column for making such application or making such filing such a requirement of such appellate authority orders. So in my view, whenever such a rejection order you are applying, attaching, you should also attach such order of the higher authority also, so that department is aware that it was rejected and thereafter it has been approved by the appellate authority. Then we will also mention whether the trust is claiming exemption as in 1023C, that is 1021 or no. If yes, then that has to be clicked. Further, it will require to give details of the author, founder, settler, trustee, member of a society, or member of governing council, or directors, and shareholders holding more than 5% shareholding, and the office bearers as on date of application. The requirement here doesn't seem that you're required to mention or as such. So all details are required to be provided. You also required to maintain the author also. You are also required to maintain the founder also, settler also, and current trustees also. The issue may arise that the settler was there. The trust was established in 1960, and that time settler was there, and currently that settler is no more. Once the settler is no more, you also required to give the details of that person, like a unique identification number. What is unique identification number? Unique identification number is the PAN number. In absence of PAN, give Aadhaar number. In absence of Aadhaar, they have to prescribe other documents such as if the person is non-resident, then tax identification number of the in that country, a passport number, election photo ID card, a driving license number, or ration card number. So person say who is no more a trustee or who is no more a settler now, and to get these details may create a difficulty for the people for making the application, and they are not given any exemption to it. Further, in case you are required to give the details of the members of the society, the for example, if the Chembur Study Circle would have been a society, and then all the members of the Chembur Study Circle are there. So say Chembur Study Circle has a 500 members. So whether you're required to make give the details of all 500 members or no. In my view, there is a fallacy in this provision here. So it's, for example, if there is say the institution like SOCM is there, and that is a society, or the Chamber of Tax Consultants, which is a society. They have 5,000, 6,000, 7,000 members, and whether they will require to give details of all these members here, I think so. It should not be that. It should be only the member of the governing council or the trustees and not the any other members. Because they are provided in case of shareholders, they are saying the shareholder should be provided only if they're exceeding 5% of the shareholding. So Section 8 company which is there, the company can be a guarantee, it is company by guarantee or even company by guarantee as well as having a share capital. In that scenario, you have to provide the shareholders detail of 5% only, person who is holding more than 5% shareholders. Then there is a clause that if some institution is set up by any corporate entity, for example, ABC Limited sets up any other institution for the carrying out the CSR activity. In that scenario, who are ultimate beneficiaries or who are ultimately beneficiaries of the company who has set up this trust is required to be provided, so that it's this provision like a significant beneficial ownership. So who is ultimate beneficial of those is only required to provide who is holding 5% and more and not the below 5%. Then item number 10, that whether the return is filed for last assessment year for which the return due date has expired. So till now due date has expired only for the assessment year 2019-20 only. For the assessment year 2021 due date has not yet expired. So the return for the assessment year 19-20 has been filed. Then you are not required to, you have to mention yes or no. And in case you mention no, then clauses 11 to 20 is not applicable. But if you mention no, then clauses are applicable. So if you are not filed the return of income, then as on date of the application, you are required to provide the details such as corpus, what are long-term liabilities, what are the funds, reserves and surplus, what are other liabilities, what is the land building, and what are the fixed assets. The investments made by such institutions under as per the section 11.5, investments which are made other than specified under section 11 and 5 and any other assets. Then item number 20 is the details of the income grant received in the 3 previous year with respect to from the government, from the companies under the CSR or any other grants or any other donations. But to provide, this is applicable only if you are not filed the return of the income for the latest assessment year for which due date has expired. In case you have filed the return, then you are not required to give details of this. Mind here, details are to be provided here till the date of application and not till the date of any other period or last assessment year or last financial year or 6 months prior or 2 months prior the date of application. If suppose you are making a return was not filed for the assessment year 20 or the assessment year 2021, then you have to use this detail, and if in case application is filed on the 16th of May 2021, you have to make give details as on 16th of May 2021. This is a very onerous requirement and it may not be practically possible to file this requirement as such. Then clause number 21A and 21B, in case the application is been made for the ATG, so ATG prescribes the condition that ATG is granted only if the expenditure for religious purpose is less than 5% of my total income. In case I am in case an institution is making a application for the religious purpose which is more than 5%, then ATG cannot be granted to that institution. For that purpose, details under clause 21A and 21B is required. This form is followed by the instructions. You are requested everyone to go through the instructions before filing the form, so that various details, how to fill the form, what you have to mention in the form can be easily available to the professional or a trust who is making the application. Form 10AB. Form 10AB has a similar requirement. So I will just go through only those requirements which are applicable only, a new requirement under the Form 10AB. Form 10AB you also require to give details of the school, college, university, hospital, yoga institute. So if there are various institutions being followed, then you have to give details of the that institution. You also need to give the person in charge of that institution name, contact number, email ID. In case of colleges, it can be a principal of that college. It can be even dean of the university. It can also be a trustee also. Whoever the person in charge, you have to give details. In case you are holding a business undertaking under section 11.4 or a business which is run under subsection 4 for the carrying on the or which is incidental to the objects of the trust, those details are required to be provided here. Under the clause 11, 12, in 13 you have to provide details of the bank, all bank accounts. So whatever the bank accounts which are held by the institution, in whatever name they are being held, you are required to provide details of IFSC code, account number, and the name of institution. Details of a land, building, or both of the application is also required to be provided. And whether you are carrying any objects which are the advancement of object of general public utility, then the further details are required to be given, that whether it involves to carrying of any activity in nature of trade, commerce, or business, yes or no. Then whether the activity is undertaking in the course of actual running out such advancement for the object, and the details of such activity. So for example, if the institution is running a port activity, and which registration is granted under this category, advancement of general public utility. And if it's charging any charges for such port activity, carrying on some port activities, then such charges should not exceed 20% of the other receipts of the institution. Hence, to justify whether it is within 20% or not, but we have to provide 15.3 details that what is total receipts, aggregate of receipts from the activities referred above, then percentage of receipts, and remarks if any. If you recollect the CNAG in the earlier report, one of the report has stated that persons are carrying the business activity or they are carrying the activities for the surplus. Probably the amendment has been made in the earlier years, in that observation by the CNAG, or even the observation made by the PAC report, where the activities are being carried for the commercial purpose. So these are the broadly requirements or the application to be made in the Form 10AB. As on that, Form AB may not be applicable, but this form can become applicable in the next month also. For example, the trust institution, which is an old trust, if you are making application for the first time, you made application in the Form 10A, and then that new application since the activity is being carried out by the trust, we have to make an application within 6 months from the commencement of activities. So from the date of granting of registration under which is made in the form 10A, you have to file the application under the form 12AB for that purpose. So these are requirements of the form. Let us consider some of the issues which we consider for the making application. And besides these issues, whatever questions are there, you can put it in the chat box. We can take it at the end of my presentation. So application was made for registration in the financial year 2021, and the registration is granted say in the month of March. So March 21, and this new application re-registration is applicable from the 1st of April. Still the provisions will apply, and whether they require to obtain re-registration, yes. So irrespective of whenever registration is granted, whether it is granted 2 days before or 1 day before the 1st April 2021 or the 20th prior to 1st April 2021, all trusts are required to obtain the registration. It may happen that the old trusts which are there, because you need to, your registration certificate is lost, or the form also requires you to make application along with the application, the registration certificate in the certified 2 copy of this registration. So once this is lost, what is the way out? One of the way out is that you can apply for the duplicate certificate, but whether duplicate registration will come within time frame in which the application is required to be made or not is the question, and especially during this pandemic, how this can be fulfilled. And whenever you are making the application for duplicate, probably you will also require to file the FIR with the local police station that this certificate has been lost. And we have made all the efforts to get this to find out. But in spite of my best efforts, I am not able to obtain that certificate. And that FIR is required to be attached along with the application for the re-registration. There can be one more option which can be evaluated, that filing application under the RTI. So filing the right for information, where you can say this trust is registered, kindly grant the copy of the registration certificate for the trust, which is there under the issued by the society or by the income tax department. So in case of RTI, the application is required to be processed within 30 days from the date of filing. So that can be one of the better way for making a application. But in the meantime, in my view, that whatever documents are issued by the department, which mentions the old registration number of the trust, probably you may file that document itself, which will give the proof that registration, this is registration number, and this has been issued by department. You can explore this also there. If the application is not filed before 30th June 2021, then you are losing the exemption for the financial year 21-22, and whatever income is there for this financial year will become taxable. And you need to make a application, will be the temporary registration will be granted to you. And once the temporary registration granted, you have to apply for the re-registration again once the activity which is commenced or 6 months prior to the. But there is a common form for filing all applications. So when you are making application in section 12 AA as well as for ATG, in my view, two separate applications are required to be filed and not the common application is required to be done. These are the basic questions. Few of them I have already considered during my presentation. We can deal with these questions subsequently also at the end of my presentation. Once you file the application in form 10A or 10AB, what is the next course of action? In case of form 10A, the commissioner or principal commissioner or commissioner, whoever is been designated for the purpose of the issuing of certificate, will issue the registration within 3 months from the end of the month in which the application is made, and such certificate is issued in the form 10AC, which contains a 16-digit alphanumeric number. This. So when you make an application, the language does not grants the commissioner or principal commissioner to reject the application. It is too mandatory required to issue registration certificate. However, the commissioner has been empowered in the rules stating that if some person who has not provided the information fully or partly, or provided the false information or incorrect information, then commissioner has a power to to cancel this application uh, under the cancel this application, and it will be deemed that such cancellation, pursuant to such cancellation, this certificate has never been issued. So the period is of 5 years with the commissioner to cancel the application if there is no information provided or part information provided, or information provided is not correct or incorrect information has been provided. So this is a very draconian provision, but there is another thing which you need to consider, that section 11.3 and 11.4 gives the situation under which the application can be cancelled or can be rejected by the commissioner. So certainly this criteria doesn't fall within the subsection 11.3 and 11.4. So in that scenario, whether this provision is the rule is ultra vires the section or not. There is a high probability the rule can be said ultra vires the section 11.3 and 11.4. Then there is when any application is made in the form 10AB, then what is the course of action available to commissioner? Commissioner, once the application is made, he has satisfied himself with the objects and the activities which are carried are genuine activities, and trust is in compliance with any other law, uh, uh, for the time being enforced by the trust or institution. CNAG has observed that in respect of the trust which are running the hospitals in Maharashtra, as per the Maharashtra Public Trust Act, there has to be some reservations in those hospitals for the socially backward people or people of certain caste or class or creed. In case such reservation has not been made, it was said that even though there is a violation under the Maharashtra Public Trust Act, but still they are granted the exemption under section 11 and 12. In order to overcome this observation, the amendment has been made in section 12 AA, 12 in AA 12 AB, which says that you need to also see that there is a compliance of any other law for a time being enforced. For here the compliance, you don't need to do a non-compliance under Income Tax Act. So if there is any non-compliance under Income Tax Act, same is not required to be checked under this thing. Further, you need to see that objectives are genuine. Objects are genuine, and the activities are genuine. So what is genuine is a very wide term or very vague term. Commissioner has to see whether the activities which is carried by the trust are genuine activities. So in past, commissioners have held that since there is a surplus generated by this institution, it is not the genuine trust, or this is there for the profit-making trust. But the courts have held profit which is incidental to the carrying of certain activities is not for the profit. Such profit cannot dissental the trust from obtaining the registration under the applicable sections. The case laws which are applicable in the various other sections, old sections will also be applicable in here also, to the extent the law is not been modified to that extent. Then the commissioner on satisfying genuineness of the objects, and the trust is compared with all the objectives and compliance of other law, it is required, then it will issue the certificate in the form 10AD. And the time limit for issue of this certificate is 6 months. And if it's not satisfied with the requirement of law and all those things, it will give opportunity to the SSC, to the trust institution, to place his case why application should not be rejected. And even in the form 10AD, the certificate format, he is required to mention when the opportunity was granted to the trust for putting its case, and the reasons for non-granting of the registration. This is the timeline for the grant of making of application under section 1023C or ATG. Timeline is more or less dicto similar to what we've seen for making application under section 12AA or 12AB. But except the two situations, in case when there is changing objects, there is no application required to be made and for ATG for that purpose. And also when there is a move from when there is a trust is operational because of section 11(7)'s first proviso, you are not required to make a application for the ATG or 1023C. Except these two, all other conditions in timeline, everything is in sync with what we have seen earlier. So I'm not going to these provisions as such. Now we come to the another provision with respect to the donations. In past GNAG has claimed, or they are in a report of 2017 has said or given the suggestion that the CBT should consider introducing automated generation of ATG certificates, which has certificate beyond the certain threshold. This is similar to what the Form 16 or 16A, which has been issued from the traces portal. To this, the CBT has responded saying that the automated generation of ATG certificate or similar lines as under traces would not be feasible to implement and would be extremely complicated for the small donors and small exempt organizations who don't submit, who would have to submit the statement to department and then obtain the certificate to be given to donors. So here, when the CBT was asked to make such a provision, they have rejected the provision and saying this will become the hardship to the trust, who are especially the small trust, and to do the activity. But in 3 years, they have taken a contrary view, and the new rule 18AB has been introduced, which is applicable to section 35 1A as well as to 80G 5, which means any trust, institution, college who is receiving a donation is required to file the statement who has granted a donation in the form 10BD, and the first such statement will be filed before the 31st May 2022. So this has to file within 60 days from the end of the financial year. And also once the statement is filed, there will be a uh, certificate which will be generated on the platform, which will say that ATG donation has been made, which is similar to the Form 16A or Form 16. And this should also be given to the donor by 31st of May. So there's an anomaly that application was last date for making a statement is also 31st May, whereas the last date for issue of such statement is also 31st of May. Eh, so whether if the application has been filed on the last day, so how this form will be generated, even if generated and the taxpayer is not able to issue a certificate, what is the consequences? One of the consequences is that the per day penalties of rupees 200 rupees. Whether this penalty applies for making a statement is applicable for filing a statement. Penalty is also applicable issuing a certificate in the form 10B. In case there are 10 certificates are required to be issued and the 10 certificates are not issued, whether the penalty can be levied for the each certificate or each instance, or it will be at each certificate. If in case if it's there for each certificate, then there is a huge hardship in case of non-compliances. Further, this all the forms, be it 10A, 10AB, Form 3F, 10BD, are required to be submitted electronically, and it can be signed using digital signature or electronic verification code. And this form is required to be signed by the person who is required to issue the who is required to sign the statement under section. You are required to sign the return of income as per the provision of section 140. So this is a person who is required to sign the return of income. So those persons are authorized to even to file these forms, and it cannot be filed by any other person. So in example, in case of school or college application which has been made, earlier those applications were signed by the principals of those schools or college. If that principal is not a trustee and not, then that principal is not authorized under section 140 of the Income Tax Act. With this, I am able to cover the topic which are there, and I can open the now floor for next 20 to 25 minutes. We have up to 12:30. So I thought let we also take the questions from the participants who may have their own queries, who would experience in filing the application, which I can take it now. Either you can put those in the chat box, or we can take it in the way the organizers can feel appropriate.
Yes, sir. Thank you, sir, for the informative sessions. I would request a member if they have any queries. Darshak Thakkar, sir. Sir has asked that after obtaining registration under section 12A, candidates opt for 1223C bracket 3AD or 3AE education institution hospital or visit where turnover is gross receipt is less than 5.
So the question is that I already have a registration under section 12AA AB, and now I want to opt a registration under 1023C. Can I opt or not? In my view, it is possible. As soon as you get the registration under section 1023C, your registration under section 12AB will become inoperational, and as per the provisions of section 11(7) first proviso, there is no vice versa, that once you obtain the 1023C and then you obtain for 11A, then the registration under section 1023C doesn't becomes the inoperational. But the registration under section 12 will become inoperational if you are obtaining the two registrations. Okay. And then you will be governed by the provisions of section 1023C only, and not that of 11, 12, 13.
Sure. Hello.
Yes, sir.
May I speak?
Yes, sir. Yes, sir. Yes.
Sure. Sir, under 1023 C3 AD and AE, when my receipts are less than 5 crores, there is no registration requirement as such. So my point was there that if my gross receipts are less than 5 crore, let's say being an educational institution or a hospital, and I'm still going for 12A registration. I'm getting my 12AB registration, but when I file my return of income, can I opt for 1010 with the C 380 being less than 5 crores? That's the question.
Okay. You can, because since you are not registered under section 1023C, which is you are not required to obtain registration as such. But once you are obtain the registration under 12AB, then you won't be entitled to claim deduction under section 1023C. That is in my view. Because the amendment where it has been proposed that I can have hold only one registration and not the two registrations. So in that view, there is an anomaly here, and you may not be able to claim the 1023C deduction.
Okay. Thank you.
Yes, sir. Mr. Nilesh, sir.
Yeah.
Yes, sir. So, any questions from your end?
No. It's very self-explanatory, very lucid presentation.
Yes, sir.
Excellent.
Thank you, sir.
Paras bhai, it was like seeing a latest movie with so many colors, so many design, and fantastic presentation. Paras bhai.
Thank you, Inesh Bhai.
Yeah.
And today Inesh Bhai is celebrating his birthday.
Yeah.
Happy birthday, Inesh Bhai.
Yeah, thank you. I missed your call in the morning. I tried to call you back. Then I realized that you must be getting ready for the presentation.
Yeah.
Thank you.
A very happy birthday to you, sir.
Yeah.
From all our members of the study circle.
Yes. Thank you, everybody. Thank you very much. Yeah. Bye.
Any more questions from the members, please? There were a few questions on the chat box. After Sonal Desai ma'am has asked, after successful submission received, that your provisional registration is done, what is the next procedure to be followed?
I am audible? I
Yes,
missed
sir.
the question.
Yes, you're audible.
So I don't know.
So once we receive a provisional registration number, so what is the next procedure to be followed, sir?
Once you receive the provisional registration number, nothing has to be done. As such, your number is valid till 3 years. But in case the trust or institution commences the activity, in that scenario, they have to obtain within 6 months from the date of commencement of the activity, they need to reapply for the permanent registration.
Okay. So the online registration opens on 1st April and it closes on 30th June, right, sir?
For Form 10AB, for the timing, yes. This is for existing trust. The form will be available subsequently also. But if you miss the bus as on 30th June, unless until the date is not extended, you will lose the exemption for the financial year 21-22.
Paras bhai.
Paras
bhai, we have received the number that application has been accepted and provisionally allowed, but the number is not alphanumerical, it is only numerical.
Probably these are the numbers because we also received the same thing, and what I understand is that this is the just acknowledgement number what is there, and in case of a provisional registration there is no facility for rejection. So whoever is applies get the number, registration number is there, and the certificate they have time limit for 3 months from the date of in the month in which application is made. So by June or so, the certificate with the actual 16-digit alphanumeric number will be allotted to the person, to the trust or institutions.
This will be just the acknowledgement of application received.
Yes.
Okay. Yeah. Thank you,
And,
Parag.
and there is a deemed receipt in my view, because the commissioner don't have power to reject the application. He can reject the registration only and not the application.
Okay. Yeah. Thank you, Parag.
Yes, sir. There's one more question from Mr. Gadda. He's asking the attachment, like registration certificate, will be there of the trust or any other documents. Where is to be attached? Do they have a browsing
In the
like
form, there is attachment procedure is there. No, you can attach there. When your online application is been done, you will find
Okay,
that
okay.
the attachment where to be
Okay.
attached.
Okay. Okay. Is your query answered, Mr. Gadda, sir? Any more questions from the members?
The attachment is similar to way you attach the form 3C along with the form 3CD tax audit
Right.
report in a similar way.
Right. Got it, sir. Yes, sir. Any more questions from the members, please? Any queries? I guess there are no more queries, sir. So, on behalf of...
First, let me thank the organizer for giving me opportunity to share my views, and also the participants for patient hearing. No, though you don't have any option to speak as such, being the online platform, but still I thank you for everyone for the patient hearing.
Yes, thank you for your kind words, sir. On behalf of Chembur Study Circle, I would like to express my gratitude for accepting our invitation and giving us such a great informative session today. So you're already receiving appreciative messages on the chat box for being the excellent program today. So Thakur sir, can I ask you to give vote of thanks, sir?
Yes. Morning, and it's my pleasure to propose a very well deserved vote of thanks to today's speaker. The outset, your presentation was excellent. You know, in every slide, the content.
Sorry for the disturbance.
No problem. Every slide carried dearth of knowledge. So thanks from the bottom of our hearts to you for painstaking efforts on coming out with this subject. In your delivery, in a very, very lucid style, you explain the nitty-gritties of the provision, make us walk through the entire gamut of provision, right from registration to the ATG nuances, which of course we will see the light of the day 1st April 22 onwards, because the deadline is of course 31st May. Thank you, sir, and thanks to the organizers for allowing me to propose a vote of thanks. Thank you, ladies and gentlemen, for your very, very patient listening. Thank you all.
Thank you.
Thank you, Thakur sir, for your kind words.
Thank you, Paras bhai. Thank you, Paras bhai.
Thank you, Inesh bhai.
Yeah, it was really good. Very nice Sunday morning spent with fantastic presentation.
Thank you, Inesh sir. Thank you for taking your time today on your birthday, sir.
No, not at all. Thank you very much.
Thank you. We hope to meet everyone very soon. Please stay safe. It's just very, I guess we will come out of this. We have already started coming out of this. Cases are reducing all over India now. Let's pray for everyone's safety and well-being. We will definitely come together and we'll be able to share more knowledge. Thank you, dear speaker, Paras sir, for today's session and taking out time for our members of our Chembur Study Circle. Thank you, sir. Thank you, members, for attending. We hope to see everyone soon, sir. Stay safe, sir. Thanks a lot once again.
Bye, everyone.
Bye, sir. Take care.
Bye.